Welcome to Breaking News to Trading Moves. Today we're looking at the market analysis that came out after Snap's Q3 2025 earnings. It gives some clues, maybe, about who's doing well and who might be facing challenges across the digital ad world. Just to set the scene quickly, Snap reported revenue up 10%, hitting $1.507 billion. Daily active users, DAUs, climbed to 477 million, and they announced a pretty big deal, $400 million with Perplexity AI.
Yeah, and the market reaction, that initial share jump, really seemed tied to that revenue beat being driven by stronger direct response ads. The performance stuff, better cash flow helped too, giving people more confidence.
Okay, so DR ads driving things. Let's start with the winners then. First up, this direct response ad tech category. What's the connection there? Why does Snap doing well automatically help others?
Well, it's mostly about advertiser confidence, really. Snap showed good results with DR campaigns, things like pixel purchase or app purchase conversions, better ROAS signals, return on ad spend. When advertisers see that working on a major platform, they get more comfortable increasing their overall mobile budgets, especially for user acquisition, UA, and using the platforms that help them buy those ads, the DSPs or demand-side platforms.
Right, so the money follows the results. The analysis pointed to two companies here specifically. AppLovin, that's AEPP, known for mobile app ads, and The Trade Desk, TTD, which is a big player in programmatic ad buying.
Exactly. They're seen as direct beneficiaries when those performance ad budgets get bigger.
Okay. Now, moving out a bit from the direct buyers and sellers, what about the infrastructure? The programmatic sell side and monetization space?
Yeah, so if the demand side, the advertisers are happier with performance, it generally helps the supply side too. A healthier DR market tends to lead to better auction dynamics. You get more buyers competing for ad slots, which improves what they call auction liquidity. More competition can mean better pricing for the ad inventory, and that translates into potentially better take rates for the exchanges, the platforms facilitating these ad sales.
So the companies running those exchanges benefit. The analysis mentioned Magnite, MGNI, and PubMatic, PUBM, because they handle a lot of mobile and video inventory, sort of adjacent to Snap's world.
That's the idea. Improved market health, better liquidity, it tends to lift those platforms too.
Makes sense. Okay, let's pivot from ad dollars to the tech itself. The second group of winners identified relates to augmented reality, AR, and the tools used to create it.
Right. This comes from Snap talking up their AR engagement. But maybe more importantly, their roadmap for spectacles, their specs stretching out to 2026. It signals a continued commitment to AR. And if you're serious about AR hardware and experiences, you need a whole ecosystem for creators. People need tools to build the lenses, the 3D assets, all that interactive stuff.
Building 3D content needs specialized software, of course. So this points towards who? Unity software. That's you.
Yeah. Unity's engine is crucial for a lot of real-time 3D rendering and experiences.
And Adobe, too. ADBE. Their creative suite is pretty much the standard.
Exactly. Adobe's tools for creating and managing assets are central to that whole pipeline. So the thinking is more AR focus from Snap could boost demand for these kinds of tools.
Okay, so that covers the winners. Ad tech like APP and TTD, programmatic players, MGNI and PBM, and AR tools like U and ADBE. Now for the other side, potential headwinds, the losers. First up is regulatory pressure.
Yeah, this was a flag Snap itself raised. They actually warned that their Q4 DAU growth might be impacted by potential age verification rules being looked at in places like Australia. If Snap, which really knows this younger demographic, is voicing concern about friction from regulation, it definitely raises questions for other platforms that also have a lot of teen or younger users. It suggests these platforms might face similar challenges, maybe needing costly verification systems or potentially seeing user growth slow down if governments push hard on age gating.
Right. And the analysis flags Roblox, ROBLX, and Take-Two Interactive, TTTWO gaming companies, but definitely popular with teens.
Precisely. They kind of share that demographic vulnerability to these types of potential regulations.
Okay, regulation is one risk. What's the second category? It seems to go back to ad spending, but a different type.
Yeah, it's about brand advertising versus the direct response we talked about earlier. The analysis noted that while Snap's DR business was strong, their North American brand advertising spend was only marginal.
Okay. So DR is about selling something now. Brand ads are more about long-term awareness.
Exactly. Think big TV-style campaigns versus click-to-buy. The fact that DR is humming along but brand spending seems softer suggests maybe larger corporations are still a bit cautious, focusing on immediate measurable returns rather than broad awareness plays.
So if those big North American brand budgets stay sort of patchy or weak,
then platforms that rely more heavily on that type of large-scale brand advertising could lag behind. They maybe don't have the same strong DR engine that Snap is showing off right now.
And the companies mentioned here were Pinterest, PINS, which is very visual, often about inspiration,
Upper funnel stuff.
and Reddit, RDDT, which also relies quite a bit on broader targeting and brand campaigns.
Yeah, those two are seen as potentially more exposed if brand budgets remain hesitant compared to DAR.
Okay, one last area of risk, and this one feels more long-term. It connects back to that $400 million Perplexity AI deal.
Right, this isn't about immediate financials. It's more about attention and where users go for information over time. Snap is integrating Perplexity's AI search right into Snapchat. Think about all the quick questions people ask, especially younger users. What's this song? How do I fix this? What should I watch? Stuff like that.
Okay.
Traditionally, a lot of that discovery and question answering happens on general search engines. But if you're already in Snapchat and you can get a decent AI answer right there without leaving, well, that could potentially change habits.
So the idea is Perplexity inside Snap might start chipping away at the time young users spend on traditional search for quick answers and discovery, maybe over the next few years.
That's the potential long-term competition aspect, yeah.
Yeah.
Leveraging Snap's user base to build a new way of finding information for that demographic.
And the established players potentially facing this slow burn competition. Alphabet, GOOGL, and Microsoft, MSFT.
Correct. They dominate general search and information seeking currently, so any platform diverting those queries, especially among young users, is seen as a potential long-dated competitor, even if it's small to start.
Okay, wow. We've covered a lot ground based on that one Snap report. Just to recap, the winners analysis pointed to ad tech like AppLovin, APP, and the Trade Desk, TTD, also programmatic platforms Magnite, MGNI, and PubMatic, PUBM, plus AR tools demand helping Unity, U, and Adobe, ADBE. On the flip side, potential risks flagged were regulatory pressures for platforms like Roblox, ROBLX, and Take-Two, TTWO, softer brand spend impacting Pinterest, PINS, and Reddit, RDDT, and then that longer-term AI competition for Alphabet, GOOGL, and Microsoft, MSFT.
Yeah, it paints a picture. And maybe a final thought for you listening is how you weigh these things. How much value do you put on strong, measurable, direct response performance today versus potential regulatory hurdles or, longer-term competitive shifts from things like AI down the road? That seems to be the tension playing out in how the market views these companies. And of course, we absolutely have to say this. Please remember, none of this discussion is financial advice. It's not a recommendation to buy or sell any stocks or securities. This is purely based on the opinions within the analysis we've talked about today.